Hey everyone, this is a trader investor. What a terrific day and a terrific week we had in the cash market this week. It was an amazing week. The reason why I say it was an amazing week is looking at last week, it was very difficult to trade, very tight ranges with the exception of last week, Thursday, very tight range. And then Monday started the same way, very tight range. But after that, everything changed. Tuesday, very beautiful down move. Wednesday, same thing, down move reversal, which we were able to capture. Thursday, down move reversal, we were able to capture. And we got a second chance of that reversal again on Thursday to capture. And today, there was no two direction trade. Except there was one if you were willing to take a risk, which I will explain in just a little bit. So this morning earlier, I explained that we were closing a previous imbalance area, and we were going to either come and close the gap because the markets were opening somewhere in this region, 319.93, 320 area is where I saw the pre-market. So I was looking for this gap to close and then for the follow through to tell us what it wanted to do. So what did the markets do? They decided to close the gap in the first 15 minutes, create that 15-minute range that I always talk about. And then from there on, it was a great run to the upside. Of course, the move was 420.80 area to 422.80 area. So that's about a $2 move. That's a beautiful, beautiful day for us because those $2 moves came without any pain. And what do I mean by move without pain? So once we broke out of here, we moved those $2 before retracing deeply and doing this, right? If the move $2 had happened in this manner, my third position would not exit at its full potential, right? It would be stopped out at a profit, but at a profit which is higher than entry, but not that full potential. So because we got the full $2 move in one shot, this small reversal, this is where we get stopped out, but we get a pretty nice profit out of the position. So again, this is just to show you how I analyze the markets. I look at the first 15-minute range. What did price do during that 15 minutes? When it breaks out, I go for that direction, especially if I don't see any headwind in a short distance. So like in the downside, if I had seen the downside broken, I would have been a little bit more cautious to enter positions because the downside had some imbalances that we would need to look at closing and so on. So that was a good entry. Now we did not get a re-entry opportunity. There was, for me, a good re-entry is not only a retest of VWAP, but that VWAP being very close to the 15-minute range like we saw on Thursday. On Thursday, that re-entry opportunity, if you had missed this zone, you got the re-entry here because VWAP above mid-range, VWAP inside the 15-minute range, but price coming from above to the VWAP, not closing below it significantly and reversing and giving us that beautiful run. And so today we didn't get that. So because we didn't get that, it was difficult to take a trade here. You could have done it at maybe, a 25-50 cents move and a quick in and out, but that requires a lot of babying your trades, and I don't like to be glued to charts. Now, the other opportunities that I mentioned on the put side, here's one put side that I was able to take. When I saw price make almost a double top here, and this had already given me a pin, similar to yesterday, pin, and a little bit of pain, and it went to VWAP. That's what I was doing. I entered here and I was looking for the target at the VWAP. I was not looking for a dollar move, a $2 move. That was not part of the idea. The idea was when we get to VWAP, the first sign of VWAP, this was an 82 cents move, somewhere around 76 to 82 cents move. That first sign of VWAP came 1, 2, 3 bars, which is 45 minutes into the trade. So that was a beautiful entry and exit. 50 cents move is 25 cents per contract, and this was just a contract to capture quick moves. This is not the full dollar move where I want to make $500 in 10 contracts kind of position, but this was just an entry that I saw and that I took advantage of. And because I used today's expirations, these options were significantly cheaper. Therefore, I could get, more than 500 out of this in 10 contracts. That's how I look at these trades. That's how I analyze them, is how much movement do I expect? What kind of price do I enter with these options to be able to take the maximum number of contracts without giving my account size any pain if it goes against me, right? If instead of going down, if it goes against me and I get stopped out, my stop loss is about 25 cents from entry, and my target is also 25 cents in this instance. Many times my target is 50 cents because a dollar move, delta 50 cents. But in this case, when I'm doing a reversal at VWAP and VWAP is very close, see, yesterday VWAP was not close. So VWAP was $1.15, right? So yesterday. But today VWAP was very, very close. It was not $1. So my target is only one target. All positions exit at one target, and the full position. Enter at 22 cents, exit at 40 cents. Beautiful entry and exit. That's all I was looking at. So again, technical analysis. Where are we? Area of value. This is a long-term trend line. We are at that trend line. We made a double top. At that double top, we have a target to VWAP. Can I go get that VWAP target? I will try. Boom, I got it. And if I am wrong, I get stopped out. It's okay to get stopped out. We will never get 100% of our trades right. The goal is to get some of them right. And so today, only 2 opportunities for me. For me personally, this are the only 2 that I saw. Break of 15-minute range to the upside, no headwind. So we made all-time highs. Fantastic. To the downside, a quick in and out 45-minute trade to the downside. That was good. There was no re-entry. Technically, there is a re-entry, but that's not my comfort zone for re-entry. We came down, tested the 38% retracement. We did not close below it, and closing above it would have been a good entry. So the 11:15 Pacific time, that's a good entry normally. The reason why I say normally is because this chart, like I said, it's not close enough to the 15-minute range, and being Friday expiration 2 hours from the end of the market and an hour and 45 minutes from the end of the market, entering this trade, I did not feel confident with it. And how much did price move? Price moved, I think, about 50 cents. So this is why I was not comfortable in this trade anyway, which was a good decision. But sometimes I get it wrong, and that's okay. Sometimes I say, this is not a good decision, and we get a spike like this, like we did Thursday. So you just have to take those trades that you think are comfortable for you, but you have to take all signals. You cannot skip signals thinking this will win, this doesn't win, because that means you get into the idea that you have to win everything. You don't have to win everything. You take signals that work within your criteria. So my criteria is break of the 15-minute range, no headwind, take it. Double top, VWAP at least 50 cents or so away, preferably $1 away, take that reversal for quick in and out. And then at VWAP, the pullback, break of structure, take it if that VWAP is close enough to the 15-minute range. If not, I usually skip it. So on like Thursday, we had price make double top. Price had a hard time breaking the highs of the previous day, so we pull back $1. We get this reversal here, and we take it. So something similar to that. So this is how the SPYs setup gave us those opportunities. In the Qs, when the markets were opening, I did say we were closing this imbalance, and I wanted to wait and see what the markets did. But we closed them. I focused on the SPYs. The SPYs were the strongest because I got the entry, the second bar, right? So in the SPYs, our entry came 15 minutes into the trading. But in the Qs, that did not come. So I focused in the SPYs. We took care of the order block, and we created a new one. Same thing. In the SPYs, we created a couple of order blocks. So Monday is another day where we will examine where we are in those imbalances. I meant imbalances, not order block, imbalance. We created a couple of imbalances, and Monday we will examine where we are in those imbalances. IWM, I actually said this morning that we were far away from the imbalance. I was not sure where we were going to go, but lo and behold, we came and closed that imbalance. So they did not want to leave it for more than 4 days, right? On the fourth day, 1 to 3 trading days, not closed. On the fourth trading day, we closed that imbalance and created a new one. So good, it was good, but we were coming against that imbalance, so I was not about to take any trade in IWM, but it turned out to be a pretty good day for IWM. In the diamonds, we were far away from any imbalance. We just kept making new higher highs, and I felt the SPYs were a little bit stronger by just how they were setting up, like a strong come down here, strong up, and then just keep pushing up. And in the diamonds, it didn't have a lot of going down and reversing, right? This wick was a short wick, so when I saw in the SPYs a much longer wick, I just felt like the bulls were in much more control. They didn't want to let price go down, so I participated in the SPYs, but participating in the diamonds would have been equally profitable at the break of the 15 minutes, and price drove up $1.70, which is good. But again, yesterday and today, the SPYs, I call it luck, but just the way the charts were setting up, I just felt like they were the better ones, and they also moved a little bit more in both instances. So that was a great day. So this is how the markets ended the week. They ended the whole week on a high note. They ended the week in the Qs. It ended on a high note, but it did not go as high as Monday. But Tuesday was a down day, and we reversed course, so we recovered most of the losses from Monday, but again, ending on a high note, even though it was not a positive week overall. IWM almost positive, but not quite as well. but again ended the week on a high note, even though we did not close that gap. And diamonds, similar to SPYs, it started strong Monday, weak Tuesday, but then boom, just kept straight up, right? So weak, strong Monday, weak Tuesday, and then started to slowly recover in the SPYs. So SPYs and diamonds made all-time highs this week. This is how the market set up. This was a beautiful trading day. So every time we get these opportunities where markets are not acting in tight ranges, we have to take these trades. If we don't take these trades, then when are we going to take them? Are we going to take them in a tight range and be whipsawed? No. Every signal we take, it's a good signal, even if we are stopped out. Signal comes, we take it. Signal comes, we take it. Some signals we avoid deliberately, not because we think it's I want to be right all the time, but the distance, right? So on Thursday, when the 15 minutes range broke, there was an hourly order block in the way. So that distance for me from 414.90 to the top of that order block, 414.38, was not enough distance for me to enter. And where did price go to? It went down to so low 413.68 from 414.95. So it went down about $1, but I had no way of knowing until this happens. So too short of a distance, I'm not comfortable in the downside. I see the reversal, a low made, higher low, break of structure. I have this pin. We are inside an order block. Then I can take it. Then I can feel comfortable with breaking VWAP. I can feel very comfortable to take this trade. That's absolutely something I like to do. So that's why when you see a signal, the reason you don't take it is because you see technically it will not work. But guessing otherwise, saying this will work, this doesn't work, that's a guessing game. That's not what we want. You see a signal, take it. If you don't take it, you miss out. You see a signal, take it. If you don't take it, you miss out, right? If like Thursday, I missed this trade, not because I did not want to take the trade, is because I was not monitoring this trade when it happened. But today, 15 minutes break, take the trade. Double top, almost like a railroad, 2 bars closing below this bar, having a pin bar here, take the trade. Take the trade, capture it. So, 1, 2, beautiful trades. So this is why I want to keep encouraging you. When you see a signal, we are not in the game of trade by trade we win. We're in the game collectively we win. So we give some back, but our win to loss ratio has to be fantastic. We give some back, we take more. We give some back, we take more. At the end of the week, we have accumulated more. At the end of the month, at the end of the year. Some weeks, some days, some months will have bad cycles where we have consecutive losses, a streak of bad trades, but that's okay because the markets decided, hey, I'm giving you this entry signal. I think I showed you last week. I think it was last week Monday, I believe. It was either last week Monday or the previous Friday, where I saw a break of the 15 minutes. I saw a distance to close this gap that was great. I took this trade, but then I saw the next bar railroad, next bar railroad, next bar railroad. So when I started to see railroad tracks like this, then I said I'm going to exit at a small loss. And it was a good decision, but it was a loss. But that's because the price decided to not give us what we want, right? I give you a signal, you take the signal, I change my mind. That's okay. The following day, I give you a signal, you don't take the signal, I change my mind. That's how it is. That's how these trades are set up. Of course, this day when we are at 419.46 and the low of 2 days, the 15-minute range is 419.85. So for me, this is not enough distance. So I did not trade this day. This was not a trading day for me. I believe I skipped that day because I see these things. Otherwise, you see a signal, you take it. You see a break of structure, you take it. You see a signal, you take it. Here, this signal to this signal, I believe I showed you this trade. I took this trade knowing I had to do a quick out because this was a headwind for us, and price did exactly that. It came here and reversed. So do your analysis, see the signal, take the signal. If you take 20 signals in a row and you end up having more losses than gains, then analyze why that is. Is that because the market decided for this period of 20 they want to do something different, or is it because your signal was not the appropriate signal? Were you taking your signal a little prematurely, or were you taking your signal a little too late? That's the analysis you need to make. And once you figure that out, you make your entries a little bit more precise. Then you take the next 20 trades and analyze again. Did this 20 trades work out? Yes. Did they work out because my entries improved? Yes. Did they work out because of some luck? If that's the case, then revisit your analysis. You want to make sure that you can repeat your process. It has to be a very repeatable process. I take 20 trades, I analyze, I take the next 20 trades, I analyze, I take the next 20 trades, I analyze, and I can repeat this cycle. And you can stop the analyzing your trades once you have 20 trades consecutively winning and 2-3 times. Like you do 60 trades, like 20 trades analyze, 20 trades analyze, you refine 20 trades analyze, refine. And then if you're consistently profitable, you don't need to go back and look at your 20 trades until you get a streak of bad trades. Then you come back and say, was this streak me taking my signals the wrong way, right? I've tried it this way and I've tried to deviate. I wanted to get a few more points and I entered early, or I wanted to protect more profit, so I made my stops a little too tight, right? Those are the things you analyze when you get a streak of losses. Otherwise, you 20 trades analyze, 20 trades analyze, 20 trades analyze. If it works out, you've got your strategy, go with your strategy. Until that strategy is broken, there's no need to stop it. And it's not about gaining an extra $5 per contract. That's not what it should be. Is if you can get for one contract $50, if you can work on getting $50 per contract average for 20 trades, you can repeat that, you are done. Because all you do then, as your account compounds, you increase your contract size. So instead of one, you're doing two. So $50 now becomes $100. You don't need to find one contract that moves $100. You can just do two contracts that move $100 together, because your entry is working to give you your $50 per contract. Right? This is the same way I'm looking at when I'm doing Forex. 50 pips. Go for 50 pips at a time and just increase your lot size. Same thing with options. Do $50 per contract and increase your contract size as you build your account, your confidence, your strategy. 20 trades analyze, 20 trades analyze, 20 trades analyze, 60 trades in a row showing you have a consistent method. That's your strategy working, done. Continue that process until that breaks. If it breaks, has the market condition changed and you need to adapt? Has your strategy changed based on market conditions and you need to make adjustments? Or are you deviating from your strategy? A lot of times as humans, that's what we do. We see a streak of 100 trades giving us that $50 per contract, and we see the charts and they say, you know, if I had entered just 10 cents earlier, I would go from $50 to $60 per contract, and I'm doing 20 contracts. That's a lot of money for me. No, don't look at it that way. I think this is where we get in trouble of fear and greed playing into the game. There should never be fear, because you have a strategy, you have a stop loss, you're not wiping out your account. And there should never be greed to say, this is not enough, I'm just going to keep going for more. That's also a way to wipe out accounts. And ask me how I know. I will tell you my story if you ask me, because that's just a quick way to blow up accounts, is both fear and greed. So hopefully this is encouraging you. Have a strategy. Let's work on your strategy. If you have questions, ask those questions, and I will help you with your strategies. All right, everyone. I appreciate you listening, paying attention. Don't forget to like this video, and I'll come back over this weekend with some big educations that I have in mind, setting us up for next week. We will look at what the markets will do next week. But this weekend it will be about learning. So I'll do a couple of videos where I will have some ideas to share. All right. And I wish you a very great weekend, and I will see you in the next one. Take care, everyone.